Let's talk about where the actual growth is happening right now. For the last 2 decades, public market returns simply haven't kept pace with private alternatives. This chart from Bank Inter shows the historical yield of different asset classes from 2005 to 2025. You can see traditional equities sitting down here at a 6.4% return, while venture capital pushes a 13.5% yield. The gap exists because tech companies now stay private for an average of 12 years. By the time a successful business goes public, the exponential growth curve has already been captured by the private equity funds that got in early. Right now, we're seeing an incredibly specific shift. The global travel and tourism sector is being completely rewired by autonomous AI agents. We are moving from software that just manages data to systems that actually execute complex travel operations. So you're faced with a choice. You know the value is in B2B SaaS, but going out and guessing which generic AI startup will survive is basically angel investor roulette. Generalist tech funds aren't much better. The travel industry runs on decades-old legacy infrastructure with complex, unwritten rules. If a fund doesn't have deep operational expertise, what the industry calls aquí, porque, they end up backing startups building flashy interfaces that completely hallucinate when faced with real-world booking logistics. Early access to validated private travel tech has evolved from an optional alternative into a structural necessity for any portfolio aiming to outpace inflation. That brings us to Traveltech 2, or TT2. It is a European venture capital fund engineered specifically to target B2B travel software. This graphic outlines the fund's rigid capitalization structure. Out of a €50 million target, they have already closed $24.5 million from the Spanish government's CDTI and another $20 million from corporate and individual partners. There is only a $5 million allocation left to fill. The immediate outcome here is leverage. By committing capital to that final slice, you are instantly buying into a fully capitalized €50 million ecosystem with heavy institutional backing. But here is the trade-off. Because the fund is already over 80% capitalized, the window to enter is closing rapidly. This isn't a situation where you can take a wait-and-see approach. It requires deploying capital right now. Hesitating at this stage simply means missing out on this highly curated vintage of private travel tech entirely. If you're a sophisticated investor, your first question shouldn't be about the upside. It should be about the downside protection. TT2's foundational shield is its anchor investor, 49. You are trading away the lottery ticket chance of hitting a 100x return. In exchange, you get a mathematically superior probability of actually achieving their target multiple on invested capital of 2.74x. TT2 is meticulously engineered to bypass the highest risk phases of standard venture capital while still capturing the high exit multiples typical of scaling SaaS businesses. Beyond the financials, they've de-risked the operational side by building in a captive customer base. Major global travel corporations, companies like Hotusa, Barceló, and Binter, are invested directly in TT2 as corporate limited partners. Because they have skin in the game, these corporations act as immediate, hungry beta testers and natural clients for the 10 startups in the portfolio. Let's follow the money here. The corporate partner puts capital into the fund. The fund injects that capital into the startup. The corporate partner then buys the software from that same startup to modernize operations. By plugging startups directly into massive corporate buyers, this closed ecosystem drastically slashes customer acquisition costs and artificially accelerates the timeline to a lucrative exit. The obvious trade-off is that a closed-loop system like this relies entirely on the matchmaking ability and industry clout of the people running the fund. This graphic breaks down the management structure. TT2 is run by 5 general partners with over 120 years of combined Tier 1 travel experience. They divide the workload using these roles, guaranteeing that if one partner steps away, the fund doesn't halt. That depth of industry experience provides the exact acquis professionnel required to look at 100 AI pitches and spot the one tool that actually solves a real legacy problem, rather than just selling hype. To access this specific execution team, investors pay a 1.8% management fee and a 20% carry on the profits. You pay these fools because combining a trapped corporate client base with elite curation effectively rigs the growth game in favor of the TT2 portfolio. So if you want a piece of that final €5 million allocation, we need to look at the actionable mechanics of getting in. For individual limited partners, there are two distinct entry points, the €100,000 basic tier and the €250,000 premium tier. This key metrics table outlines the financial targets. The €100,000 ticket is designed to capture the baseline yield, aiming for a 19.03% gross internal rate of return and a 2.74 multiple on invested capital. Along with those returns, the basic tier provides a 99, but in exchange, it transforms you from a passive investor into an active co-investor moving alongside institutional smart money. Both tiers provide a defended yield. The difference is that the premium tier buys you total strategic optionality within the Traveltech ecosystem. Before you move forward, you have to accept the ultimate trade-off here. An investment in TT2 requires locking your capital away for an 8 to 10-year fund lifecycle. But if you can trade short-term liquidity, the facts show that the exponential wealth generated by AI in the travel sector will be captured right here in the private B2B infrastructure phase. Venturing into this specific sector on your own is reckless. TT2 offers a proven management team, corporate co-investment, and the unique safety net of the Spanish government. The reality is that out of a €50 million fund, there are only €5 million left to place. Securing a $100K or $250K slot in TT2 delivers a mathematically rare, highly engineered alignment of capital protection and asymmetric vertical upside.